thank you and congratulations to all my tax colleagues for pulling this event together. So without further ado, Jiten, first question to you. Let's use a cricketing analogy. What's your read of the economy right now? Is this the time when you want to go halfway down the pitch, toss something for a six? Will you play defense? What are your three top priorities as CFO right now?
I think in this IPL season, you are starting with a googly. I thought we were here to discuss tax. And as a CFO, you have to be always cautious of, the growth aspect of the business. Working for Tata Group, I would say the social aspect of the thing, ESG, that's also very important for us. And within that, the compliance and everything. So I would say that when we are looking at growth, as a CFO, if I take examples from our own it's like as a gardener, you weed out whatever is non-core, whatever is non-essential, and you take a support of lot of data. So data becomes more important, and that's actually our third piece where automation is important, analytics is important. So over the years, what happens is that you look at various aspects, the businesses, the segments. I mean, not many people know that Voltas, although we are known for ACs, but we have a full range of all kitchen appliances, which we market in the name of Voltas Baco. So that's a new initiative where we felt that when you are selling ACs, you are only selling ACs only, let's say, on the 4 months of the year. What do you do in the next other 8 months? So we're there by this idea of developing the other consumer goods also. So we have a joint venture with a large company. So that all developed from the this data, that how do you make profits for your dealers who are going to be working with you. So that has become organic growth, inorganic growth. So that has become the hallmark of as a CFO, how you can contribute or how you can be the right hand of your CEO working on that. So I know we have all read in the books that the function of a CFO is changing from the whatever words were used, the bean counters and stuff like that. So all that has changed, but to actually do it in practice, it is the important thing. ESG, working for Tata, the G part comes naturally. There is nothing which where you can forget about governance. So you have to be day in, day out, you have to be breathing that. So there is, and it's never about just about the rules and regulations. It's beyond that. It's the intent. It's the walk the talk. Everything is all encompassing in that. Now coming to the S part, I know the corporates, the laws have been made by the government that you should spend 2% of this in your CSR and all. But I think in our company we don't look at that. We like to be known as where you're making profits in a sustainable way, rather just putting the 2% off and making the profits in whatever way possible. So that's not our philosophy. So whatever we do, and finance really plays a very big role in that, because you have to measure what you are doing, and the social consciousness really takes a larger stage in that when you are even when the government had not done any rules and regulation on this energy efficiency thing, Voltas was in the upfront. In fact, I could probably say that the government learned from us how to create those rules and regulation, and now every 1 year or 2 year they add up, and now probably we are even more stricter than some of the European and American standards.
So Jiten, I'll interrupt that here. Just want to make sure that we cover all these various aspects. I think you're laying down the role of the CFO really, really well in all its dimensions. So I'll come back to you in a moment, but I do want to flip to you, Vidya. Sustainable growth, responsible growth, profitable growth, all kinds of growth. What are you looking at as a CFO as your top 3 priorities?
Yeah. So I think 2-3 things, right? One is you've already said, both of you have laid the context to it. I think future-proofing the business. So I think it's an important role, and I think the CFO does play the role, especially because you're also the risk champion. Therefore, keeping an eye out on what's happening from risk framework and then trying to make changes in the business to make that happen is certainly an important parameter. Going back to IPL analogy, is I think fundamentally it comes back to forming the team, right? I mean, so much of debate and discussion goes on who's the right person to have. I think we will be in the years to come facing up with the challenge of, lack of available talent.
Fantastic. So love and cash. So Murali, does tax have enough of that? And do you see tax using love and cash to contribute? And where are you seeing some examples of making the impact for the business?
Yeah, I joined IKEA two years ago roughly. And every day morning I see Pari, who's our HR manager, and I said, you conned me into this job. She never shared a JD. She said, okay, welcome, this is what you do. So as a tagline, our tagline is providing affordable furniture for the many, right? But fundamentally, we have a furnishing retail business, a food business, right? We are into commercial real estate development. We are into services, and all this packaged into one. And for me, then, as a responsible CFO, what is very important that the tax function mitigates my risk. And that's the first and the big role that they play as partners in the whole business. And to me there, the fundamental part is the compliance part, which needs to be secured. And that's where technology starts to come in play. And that's where we have been starting to work with various business partners to make sure that that gets sorted. The second part is I don't want my tax head or the tax manager to work I want them to be more business partners. The role has to be more towards as a business partner, providing solutions, creating solutions, as Sanjay talked about. And the last part is building trust and transparency, both inwards because and with external authorities. Because unless and until we work with authorities and sit down with them and explain and are open with them, it actually will not enable us to take a smoother journey. And the more you are, it's not that the authority is not willing to listen. Maybe X is not willing to listen, but there is a Y and a Z who's very, very willing to listen in today's environment, right? And which is very heartening to see. The three roles that I see the tax colleagues play for us is one of that of risk mitigation, second of being very strategic partners, and helping build trust and transparency across both inward in the organization and as well as external as well.
Thank you. I think, again, already I can see 2 or 3 very interesting themes. Jitendra, you talked about making profit for your dealers. You talk about making profit for your customers as an essential part of your business strategy, yes. Right? Also, the idea, you also said that there are multiple businesses. This is not a question of a single product, single business anymore. There are many, many businesses inside a complex business environment, and therefore the idea of tax being a strategic partner. Naveen, now to you. What are some of the great examples and you've seen tax actually contribute and come forward and create impact in this complex business environment?
So very briefly, my experience has been with oil and gas, then with alcohol, and now I'm with HUL, part of the CPG kind of business, which is full-fledged CPG. The way I have seen tax performing the role of a business partner are around 2 pillars. One is around creating value, and one is around protecting value. So one of the foremost things that I've learned here is how do you create agendas on those 2 pillars while you work with the business. Let me give you one of the examples. Like if you're launching a new product, you are into a new segment. one of the things that comes here is what is the tax rate which will be applicable to that. A lot of times the new products that you're launching are among a lot of uncertainty on classifications. There was something by FM, there are huge issues on classifications. So how do you do a right classification, because that impacts the price? How do you get certainty around that? Then the other question comes here is what should be a route to market? How you're going to sell the product. There could be various options or thoughts of the business. You want to sell it to dealers, you want to do a 2P manufacturing or a 3P manufacturing, you want to sell it direct to the customers, you want to sell it to the modern trade, online. The tax implications could be different, margins could be different, schemes could be different. So how do you structure it end to end from a tax perspective? The other thing which I learned is how do you optimize the state incentives when you're chasing growth, when you're chasing market share, and when you're trying to improve your gross margins. So whenever we are looking at the product cycle or the future outlook, new investments, we also scan the all India environment to see who are the best states, not only from logistics perspective, but also from the state incentives perspective, how we can optimize some of that. But what I believe is very, very relevant in today's world here is, and as HUL, we take a lot of pride in being a sustainable company and headquartered in UK as a very, very responsible Indian company. We proactively invest in ESG. So palm oil is one of the things which we use a lot. And how do you procure it sustainably? If you procure it sustainability, it becomes expensive. Now you're competing with domestic players. So sustainability is our priority, not their priority. So if you are importing, we are investing, our products are expensive. Our margins get dilutive. So one of the aspects to be looked at here is how is that you can work with the government, you can work with the businesses to mitigate some of the tax cost which comes around sustainable procurement or sustainable imports. How's that you can work with the government to say, look, I'm doing the right thing, I'm expensive, somebody else is doing other thing, why is somebody cheaper? One more example I can give you. We were importing the stuff in India. There's a huge freight cost paid on the import of the liquid. You used to keep in a normal custom bonded warehouse. Beyond a particular days, you pay interest on that. And as and when in my previous business, liquor gets manufactured, there is a period of utilization and consumption. You keep on paying the freight till the time containers go back. We said, why don't we look at some of the free trade zones where we can import, we can store, and then we can truck the liquid. That comes with a huge issues around the customs challenges, the valuations, what will happen from the time you clear the products. Will it be part of the valuation, not valuation for customs duty? We said, let's go ahead and take advanced ruling. So we worked proactively, took advanced ruling, mitigate the risks. So to me, what is very, very important for a tax professional here is how do you become a part of the business finance? How do you become the part of the business team? And that is only possible in the three organizations that I've worked with. Tax is more of a business embed rather than a tax embed. So once you breathe business, when you think about business, when you're looking at those things, you apply a tax lens and see where is that I can create value and where is that and how is that I can protect value for the business. So that's how I'll articulate it. I believe there is no business transaction in today's world that can be thought of without taxation. Tax has to be part of each and every business conversation. If you're not doing it, you're de-risking it. Government has enough data when it comes to GST, when it comes to income tax. They're not only looking at a transaction from a GST investigation, income tax investigation, withholding tax, they have a 360-degree view. So we have to be in control of our houses and be embedded as part of business.
Wow, I'm sure those are golden words and they would have really, really resonated with so many tax professionals and finance professionals sitting out there. So thank you for bringing this to life. So Jayant, over to you now. So yes, of course, tax is a business partner. Tax function is an integral part of the business and finance. but one has to balance this. So you as a CFO, Jitendra, how do you look at tax and how do you enable them to balance these two priorities?
I take one word from Naveen where he says tax is a certainty, and we all know this adage that tax and death are the two certainties of life. So we have to go along with that. And as far as balancing is concerned, you take it as a cost of doing business, and in our philosophy, it's a way of giving back to the society. You need to be transparent with the authorities. We have seen that the day they ask the data from you, if you can give the data back to them in a day or 2 days, the trust increases. Whereas I have also seen the regime in the old days, when you were in the manual systems and all, genuinely you needed to take a week or 2 weeks, and then that trust doesn't get developed. But nowadays these technologies are enabling you, so we definitely take use of the technologies everywhere to do that, and in that sense it helps us improve on our this, or rather balance the whole cost structure of our products and the reputation along with that.
No, I think a great point that so firstly the environmental, of course, both from within the company, the regulators demanding transparency, but technology driving it with speed and the level of granularity now available, it just makes sense for that partnership with the ecosystem also to come together on that. I'm going to switch gears and just take that cue from technology a little bit and come to you, Vidya. In the broader sense, technology is obviously almost forcing our collective imagination to say, okay, what can you do with me? So it was about saying, okay, here's the problem and how can I solve it? And now, if you see digital first, it's about, wow, what can I do with this, right? So there's a little bit of balance of problem solving versus art of the possible right now. What are you seeing in terms of digital trends in finance, in tax, or more broadly in your business?
See, I think you used a good word, imagination, right? I think now is this time we have the tools, we have the technologies to actually imagine our entire ecosystem. What is possible for us to do is to actually create a larger ecosystem with suppliers, with companies, with us, and also with our customers, where you have an end-to-end visibility of the entire supply chain. I think the second piece, which I think a lot of the gentlemen here talked about, which is different from other panels I've been in the past, where everyone here is talking about sustainability, right? Now, the power of digital on piecing this together is also very important, because now all of us as companies have to measure our scope 1, scope 2, scope 3 emissions. So for that, you actually need technology and digital. It's not possible to measure this one by one. And the reason why so many leaders here now are talking sustainability is that we as finance professionals will really have to measure impact and cost in a way which is different from our P&Ls and balance sheets. It's a whole new reporting layer which has already started. It's going to get more and more expansive. We'll have to report to the stock exchanges. We'll have to report to countries that we're going to export to. So all of this is going to happen, and I think that is a piece that I see work has started, but it will actually accelerate in the next few years.
So slightly more provocative question to you, Naveen. You're the senior tax professional here. Is tax taking advantage of technology? Is all this transparency, granularity, ecosystem, all these wonderful things, is tax taking enough advantage? Do you see that? Or where do you see the opportunities for tax to do more?
So let me give you some context on how tax as a function is evolving and how I see it evolving in the future. Now what I'm seeing more and more HUL, Diageo and somewhat in Vedanta in my earlier stint. But we're hearing compliance excellence being formed. So compliance absolutely either is outsourced or is in-house, embracing technology, current tax, deferred tax, TDS, GST in any cases end-to-end, reconciliations, everything we want to be fully automated, prepared. The review functions rest with the tax business partnering team or the COE teams who advises business, including CBCR, pillar 2 workings, everything are being automated, including the tax contribution to the exchequer. So all the compliance part, everything is highly dependent on technology, leveraged on technology. Even the risk reporting, the companies have tools where the risks beyond a particular point should be reported. In Diageo, we went a step further. We automated the content in those UTPs, which is tax memos, and the numbers get automatically converted from INR to dollars or other currencies to the functional currency automatically, and the changes that you make in text gets automatically populated in the different set of documents that you prepare for different set of meetings or discussions. So whether that piece is evolving, automation is happening, absolutely yes.
I'm going to do a rapid fire, just 1 minute each. I'm going to ask the three of the panelists here, since you've done the crystal ball gazing right now, Naveen, I'm going to start with Jitendra, you. A little bit of peek into the future. What part of tax do you feel like will the machine and AI and all the rest of it answer, and therefore will disappear in a way or get digitized completely? And what part do you see, remaining or growing or evolving from there? And I promise I'll make my question shorter when I come to you.
I thought stargazing was part of the tarot reader, but I'll try to attempt. See, when we are doing our own, innovative things, AI, this, that, we also should keep an eye on what the tax department is doing. I think we discussed about that tax department is collecting a lot of data. So we will have to be, adaptive to that part of the technological advancements, that how do we integrate with that advancement of the tax department, so that our jobs become easier and tax department's job becomes easier. We talk about reconciliations and all those things, and I'm talking about the full integration. If we can achieve a kind of a MySAP talking to the tax departments, tech, whatever platform they have, and then it's easy. I mean, as a company, I don't want to hide anything. I want to be transparent, and therefore we should be alive to that kind of technologies taking over. The second quick thing is this talking between tax authorities within India with all those others, whether you talk of Pillar 2 or whether you talk of OECD rules, and also all that is also happening. So I would say generally people should become wary of those kind of things and be careful and use their technologies to come out open and be transparent on that.
Thank you. Crystal ball gazing from you. Vidya?
Yeah, I think the piece that is going to get faster or this thing is, again, like you said, 360 integrated view, not just a view as well as, but also the tax teams. I remember in 2017 when GST was just introduced and we attended conferences like this on GST. I don't know whether I should be telling this, but we were all promised this dashboard that a CFO could see and see what's exactly happening. I think that dashboard has never really fully evolved because all the partners are not necessarily fully compliant. But I think in the next 5 years, we'll get those dashboards which will give us a 360-degree view of what's happening with us, with our channel partners, with the tax team, etc. The piece that I think not disappearing, but I hope more will happen is the assessments. The GST assessments are now, they are just becoming really, really complicated. And I think if we can increase the speed in which, companies and department can work together and make issues, fine, you can have a difference of opinion, but, then it can't get into the same process of litigation that, we've always followed. If we can reach to a conclusion quickly, because all the data is with the government, I think that will be helpful. Yeah. So I hope for that in the next 5 years.
Great. And yes, final words from you, and take your couple of minutes, because I'm very happy to eat into Prateek's time. Just like
you're okay with that, Prateek, right? No, no, I won't. I mean, it's well covered by both of you, so it's not much to add. For me, sorting of the data, right, and as you said, 360 degree, right, getting that picture together will surely happen in the next 5 years, right? One of the other things that we need to play a more active role as corporates, right, is to engage with the authority. And I think we shy away from doing that because of whatever reasons we have had historically. But the more you do it at the initial stages, and there are many authorities, many of the departments who are actually looking to engage because they are in that stage where they're doing formative activities right now. To do that, and I mean, as you as consultants are, in many of the spaces you are engaged, right? So if we can start to influence that structure and then enable the whole thing to integrate probably over the 10 years or 15 years, so that, as you say, it's a dashboard that we can open early in the morning, be comfortable with, and then move on to whatever value-adding further work that we can do, will be what I would see as the future. And it will happen, for sure.
Well, thank you. Thank you for being a great panel. I hope to the audience that you enjoyed the panel discussion. I certainly did. And thanks very much for your time.